BlackRock just out with its earnings, beating on both the top and the bottom lines for its latest quarter. Joining us right now is Larry Fink, BlackRock's chairman and CEO. Larry, it's great to see you. It's great to have you here. And looking through these numbers, you beat expectations by a long shot. $6.60 versus the $6.36 that the street was expecting. Revenue also beating. And in fact, revenue year over year up by 11% because of an increase in higher base fees and then growth in technology services revenue, too. I think what surprised me the most, though, is the idea that you actually saw $35 billion in quarterly net inflows that came in during this awful quarter for the markets. Tell us a little bit about what's happening, what you're seeing.
Well, first of all, welcome. It's nice to talk to you from home. This is my first time talking to all of you from home. It's a little different for me. So let me just start off and say, Becky, that it's been hard for everybody, obviously. BlackRock, 16,000 employees really brought everything together. And if I reflect on the quarter beyond our inflows and outflows, a few of our major components of our business really performed really well. There's been so much talk over the years about ETFs. And on the show when I'm there, I'm always asked about ETFs and do they represent risks? Well, let me just say, first and foremost, the ETF markets performed incredibly well, even in the most stressful weeks. Those who were looking for liquidity, those who were looking to move their beta exposures up or down were able to do that. All the fixed income ETFs have performed quite well. There was never a period of time where the imbalance between the underlying assets and the ETFs were really askewed. And most importantly, what we saw many first-time users of ETFs, whether to sell them to reduce their exposure or to buy them to get exposures. So that's first and foremost. Two, in our quarter, the Aladdin revenues were up 34% from a year ago. But most importantly, we have 250 clients, including all of BlackRock. The Aladdin system worked fantastic. We did not design Aladdin to having 90+% of your employees to be working from remotely, and then all our clients worldwide working remotely. And it performed really well. And I probably received more compliments about the Aladdin system in the first quarter than any time, and maybe the cumulative time of BlackRock and Aladdin. And yet, yes, you're right. The whole firm came together with $35 billion of inflows. Let me describe that. But before that, as you suggested, our revenues were up 11% from last year. Operating income was up 3%. And our margins really didn't move that much, down only 20 basis points. But let me really give you the underlying transformation of the quarter from something that was fabulous to something that was really poor. And I want to use the benchmark of February 21st to give you an idea what we saw. We saw cumulatively from the beginning of the year to February 21st, we had about $82 billion of long-term inflows. We had actually outflows in cash in the first part of the quarter. And then from February 21st to the end of the quarter, we actually had $100 billion of outflows, mostly in index products where people are buying in and out, getting their exposures, whether it's index products or ETFs. And so it was a big reversal of market sentiment, obviously. We actually were beginning one of the best first quarters in our history with $82 billion of inflows by mid-February, and then obviously ended up where we were. So we saw big outflows in index products in the last 6 weeks of the year, huge inflows in cash. And then since the quarter end, we're seeing more inflows. Probably one of the other highlights of our quarter, unlike the industry that had over $100 billion of active equity outflows, we actually had active equity inflows of $4 billion. And so I think what the quarter shows me is the area where we emphasized iShares, illiquid alternatives, where we had $7 billion of inflows. We emphasized cash for the last few years with over $50-odd billion of inflows. So between iShares, between our Aladdin platform up 34%, the components worked. And then I would also say, I think one of the biggest reasons why it worked, we have spoken to over 50,000 of our clients since the pandemic really became the top priority. Between myself and a few other executives, we have had over 100 different individual virtual meetings with other CEOs, other CIOs, and governmental officials. So I think the presence of BlackRock worldwide has really given us the opportunity to be working with our clients, helping our clients. And in some quarters like this quarter, working with clients meant helping them reduce exposures. But overall, as I've been saying to you for many quarters, we're winning more share of wallet, we're winning more share of mind with our clients.
Hey, Larry, let me ask you, just based on the number of clients you've spoken to, based on the number of government leaders and others that you've spoken to in this whole thing, would you say we've seen the worst of it, or would you say that there is more bad news to come?
Well, I'm not a scientist, so it's hard for me to answer that question. If the disease curve in the developed world continues to decline, at the same time we see the curve of governmental support for monetary policy and fiscal policy worldwide increases, we could have seen the bottom. On the other hand, I think what the market is still underappreciating, it has been mostly the developed world that has experienced the virus. As we start entering summertime, the Southern Hemisphere is going to be beginning to have their winter. And, are we going to see an acceleration of the disease in other parts of the world? And does that mean we close our borders for a longer period of time? We may be opening up some businesses. We may be experimenting how we reboot our economies and our businesses. But I don't believe we have any real information how the disease, how COVID-19 is going to spread in the world. We have learned, like in Indonesia, burials are up 40% from a year ago. And yet no one talks about COVID-19 in Indonesia because there's no testing. There's not an ability or platform to really monitor that. And that's one of the big issues that we are going to have. And the IMF and the World Bank are talking about this right now, where we're seeing, obviously, most of the supply of masks and gloves and everything are being held in the developed world. The developing world does not have that ability to secure the masks. They don't have the necessary healthcare systems, much more crowding, larger cities. And so we're going to still see elements of the disease increasing in other parts of the world. And until we have adequate testing, rapid testing, it's very hard for me to see how we're going to reboot in the next 30 days. Every business is going to be very cautious. They want to be protective of their employees. They want to make sure if their employees feel good about coming back to the office. Let's be clear, anxiety is still very high. And we hope we have the ability to reboot, but in doing so, and I know many leaders told the president yesterday, we need to have adequate testing to make sure that we have a secured environment. And the one thing that's very clear, I'm sorry, what? That's Becky?
Go ahead.
No,
go ahead.
Well, I'll let you.
What's adequate testing, Larry? How do you measure that?
I think it's different for different organizations and different situations. In a factory where everybody is coming to work in a defined location, that's a closed environment. And in a closed environment, you're going to have the ability to do either weekly testing, and through that process, you could probably reboot. In the service side of the world, like restaurants, like airplanes, that represents a different issue because you have an open system. And the question is, how do you reboot that? To me, it is all about testing and making sure that we could assure safety. We could assure that people can eat at a restaurant, fly in an airplane with the security that every other person in the restaurant or flying on the plane is disease-free. And until we have that type of testing, yes?
Well, we just spoke with Eunice Yoon, who's in Beijing, and she was telling us about some of the testing they're doing there. Basically, she has to have a card with a barcode on it that checks her to get into her apartment, that checks her to get into restaurants. And part of what they can see with that is her health status. But they can also see where she's been for the last 14 days to know that she hasn't left Beijing. She said you give up a lot of privacy, but on the other hand, you can feel more secure when you're out with some of these places to know that if you're in a restaurant, everybody in there has passed that same check to get in. I don't know if that's the type of thing that would fly in a democratic society like this, though.
Well, I think this is why China has been able to reboot faster. In my conversations with the Chinese leadership, they're still very worried about the service side of the economy. Restaurants are not close to full, maybe 30% full, even with that testing. People are not flying. So in China, you're seeing the manufacturing side of the economy rebooting. You're not seeing the service side rebooting as fast. It is far from normalized, and you're right. In democracies where privacy is a very strong foundation of who and what we are. Obviously, if people agree to that, that's a whole different story. But it's going to be hard for me to see people giving up those rights.
And then you carry out the idea that we are such a services-based economy that starts to make you wonder about what happens from here. We can declare things open, but if there's not demand for it, if people don't want to go back to restaurants, they don't want to go back to spas, they don't want to go back to gyms, what happens?
Well, it's our economy. I don't believe we'll have a V-shaped economy. I think we're going to have something closer to a J that ultimately turns into a U. If we have adequate testing, if the testing that Abbott Labs has been testing, if that works, and we have adequate testing, maybe we can have airports prior to you going into the terminal. You go through a process of being tested. And maybe it requires getting to the airport even an extra hour or hour and a half earlier to go before you enter the airport itself. You're tested, and in 15 minutes later, it's determined whether you're disease free, and then everybody who is in the terminal on airplanes, everyone can feel secure. So it's about testing, it's about knowledge, and at the same time, it's about creating antiviral cocktails that reduce the severity of the disease. If everybody felt much more comfortable that, okay, I could get COVID-19, and yet, I have a very modest risk of being placed into the ICU, more like an influenza, maybe we could get on to our life. Originally, when people were talking about COVID-19 in the early months, we were talking about, well, look at the influenza. We have around 22,000 Americans dying every year with the influenza. Many people get the influenza every year, and that we live our life with that disease. We need to get to that point where we're going to live our life with COVID-19 too, whether that's going to be through a vaccination or through therapies and a cocktail of different drugs to reduce the severity. And I feel very confident over the course of the next 4 to 5 months, we're going to determine different protocols to save lives, different protocols to minimize the severity. And through that process, I do believe we're going to be able to reboot. I do believe we're going to have a better, more normalized environment. but it may not be in June or July. It may be in August. And so the economy it will be slow to really reboot, as you said, because we're such a heavy service side economy. The most important thing, we need to have all Americans feeling comfortable, feeling safe. And at this time, I don't believe that many people feel secure and safe.
I want to get back to our very special guest this morning. Larry Fink, the CEO of BlackRock, is here, the world's largest asset manager. Larry, it's great to see you. And I want to go rapid fire with you because we have so many different topics that we want to get through with you. But I do want to just pick up on one very quick thing that you just said to Becky before, which is this idea that you don't expect a V-shaped recovery. You talked about it maybe being a U or even like a J. Give me the 30-second version of your thought there, given the risk in the market today.
Well, hi, Andrew. So the risk for the market today is that the disease curve takes longer. The risk for today is that we don't have Americans and Europeans feeling very comfortable with their environment, and so that will be taking time. What I'm saying is, I just don't see a rapid rebound. I see a rebound that is going to take time as we develop the testing, as we develop the antivirals before we develop a vaccination. And so I just think it's going to be
but you
a
also
longer period of
suggested
time.
that we might be at. You also suggested we might have hit a bottom, and so I think what we're all trying to figure out is the market fairly priced?
Well, there are two curves. There's a curve of the disease and then the curve of government response. We've seen historic governmental response. The Federal Reserve has said they could purchase a couple $1 trillion of assets. In addition, the monetary stimulus from the different central banks like the ECB, right, and the dramatic fiscal response by the American government and by other governments. And so we're doing quite a bit to stabilize the economy, to stabilize markets, to allow corporations to access capital, and so these are two different curves. And right now, the response by governments is quite large, and I do believe
what's the long-term impact of all of the response by government? Talk about the long-term impact of that, because one of the other questions out there is, if we're going to be printing money and every government is going to be printing money, is it going to effectively nullify everybody, or are dollars going to become so less valuable, and therefore, by the way, maybe assets are more valuable? Maybe we do have inflation.
Great question. I think we are triaging a sick economy. We're doing everything we can to stabilize this economy, to make it healthy again. And in doing so, yes, we are accumulating large amounts of debt. To me, it's like it being in an operating room. You're doing everything you can to keep the patient strong. And I think that's what our government is doing. And I applaud our government for all the actions they're doing it. And I will hope Europe, specifically Germany, does more. I think Europe needs to do more. I am very worried about the actions of Europe, because they're not as significant as they should be. And so, we're going to have to see how this all plays out between the length of time that people feel comfortable related to their lives and their safety, and then the other curve of governmental support. I do believe in the United States we're going to have another fiscal stimulus to help small and medium businesses, to help the independent contractors.
How big do you think that's going to have to be?
If it adds up another $1 trillion, it's going to add up another $1 trillion. And so now, going forward, as you asked me the question, what does that mean? It probably does mean in 3 or 4 years, we are going to be looking at more inflation. We are going to look at potentially a debasing or a devaluation of the American dollar. I mean, the American dollar is almost at a record high right now. And so a little devaluation of the dollar right now would really improve our competitiveness worldwide. So I don't look at that as a bad thing. I actually look at that as a good thing. Right. And as the way you framed the question, Andrew, I do believe some inflation would be really good at this time.
Okay, let me flip the whole conversation around. One of the things we've talked about for years is ESG. You've been one of the biggest advocates for ESG, the idea of environmental governance and sustainability being such an important thing for companies to be focused on. And yet, in a world where we are socializing losses and privatizing gains, and the government has effectively created a put for every company in America, and you could even argue perverted the very idea of free market capitalism, where does ESG land in the middle of that? Does it have any importance anymore? More importance, less importance?
I think long run, it has much more importance. First of all, in the first quarter, we did have $10 billion of ESG ETF. So we saw from clients more than ever demand for products that have an ESG focus. And for the fifth quarter in a row, those products outperformed regular indexes. I actually believe when you focus on safety and people's fear of the pandemic, it also enlarges people's feelings about our environment. And so in my conversations, even with the pandemic, even the closing of all these small and medium businesses, even with all the stress, I'm still having a remarkable amount of conversations about how should ESG play in a portfolio. And I think the conclusion will be when we're over the worst part of the virus and we have this upswing in the economy, I truly believe more and more people are going to say, I'm still worried about our world beyond just a health crisis, but also an environmental crisis. And so there is no question today in our dialogues, the economies, the disease curve are more prominent in conversations, but the conversation about ESG is just as prominent, maybe secondary to those primary questions. But let's be clear, in our flows in the first quarter of $10 billion in ESG strategies, that says it all.
But what do you think about the government effectively privatizing or rather socializing the corporate losses that are taking place and privatizing the gains? Because that's what's happened here. We've now done it twice, effectively in the last 12 years.
And I do believe it's going to lead to questions of the role of stock repurchases. We may see rising corporate taxes to pay for these deficits. We're going to have to when we're over, you're asking questions that are not, in my mind, as important at the moment, but will be very important once we believe the disease curve is behind us and we have more safety and soundness. Your questions are legitimately important, but I don't believe they're primary at this moment. And we all have to be worried about how we are triaging and fixing the health of the global economy. We are doing what you just said, that we're not weeding out the underperformers as fast as we should be. Generally, during steep recessions, the cleaning out of companies is a natural process. So you're absolutely right on this, and but I don't know how today, especially with such governmental support. Yep. Is this time, Andrew, to pick winners and losers? And I have a hard time making that judgment call now. And if you're picking a loser, are you Larry, willing to say that 120,000 employees are going to lose their job?
Right. Larry, it's a longer conversation. I absolutely agree with you. Today is not the time to legislate that, but it is a conversation that's going to have a huge impact on our country and I imagine on the markets in the future. And I hope we can continue that conversation. Stay healthy and safe, Larry. We appreciate spending time with you this morning.
Please, thanks.